What's going on, guys? This is Adam with Uprise Real Estate Partners. I'm the CEO and founder. And today we're going to be talking about, is it time to sell or is it time to hold on to those real estate assets that you have? And we're going to be talking about some important things that you need to consider, some things you need to know in making those decisions for you and for the rest of your family. Okay, so stay tuned and let's get down to it. So guys, these are important things that we need to discuss, okay? So here's what's going on. We have the coronavirus is affecting everybody. It's not an American thing, it's not a European thing, it's not an African thing, it's not an Asian thing. It's affecting everybody on this globe, right? So let's look at what's happening, right? We have unemployment that is skyrocketing with people losing jobs left and right. We have stimulus packages going out. All governments are printing money like crazy to stimulate their economies. We have companies filing bankruptcy. We have other companies trying to get bailouts. We have people, getting as much cash as they can and hunkering down to make sure that they can last through this time. Kids are out of school, being homeschooled. There's so many changes that are going on that it doesn't matter what industry you're in, you're being affected one way or another. You're being influenced by the coronavirus one way or another, whether that's good or whether that's bad. Maybe if you work for a grocery store, maybe that's good. Maybe if you work for a hotel or restaurant, you own a restaurant, not so good. Depending on what stocks you have before, not so good. Depending on what stocks you can buy, maybe it's a good thing, right? So what we want to talk about here now is real estate, right? Real estate. Why? Because you can check out one of our other videos. You can check it out. So you'll be able to check out our YouTube channel. And hey, I want to go ahead and mention, if you feel the information is valuable content, please hit the like button below and then also subscribe so we can let you know when our new videos come out. So in one of our other videos, we talk about, is the right time to buy, right? We're getting that question so much. Why? Because so many people got 2008, 2009, 2010 in their mind. So many people who love real estate and invest in real estate, they're saying, I missed the last crash, right? I saw other people get wealthy. I saw other people set themselves up. I saw other people put themselves on a path and trajectory that changed their lives forever because they were prepared to take advantage and they had the knowledge and the wisdom and the resources to take advantage of what happened in the last crash. Well, I missed that one. I ain't gonna miss this one. So we've gotten so many questions about, is it the right time to buy during this time, right? Some people think it's just the coronavirus that's affecting everything, and as soon as, like for example, this week, everything's being lifted up, states are, pulling back restrictions, pulling back coronavirus guidelines in terms of how they're running their cities and what businesses can open up and stay closed and things of that nature. And so some people think everything's just gonna go back to normal, right? I respect your opinion, but me personally, I just don't believe that, right? And look at some of our other videos and videos to come on why we think that's not the case. But we personally think that the coronavirus was just a tipping point, was just the needle to the bubble that was in the American economy. You say, Adam, what are you talking about, right? And then Adam, why don't you go back talking about, should I sell or not sell? Hold on. Context. Look, I don't know how you do it, but at Uprise, what we do is we look at context, right? We look at context, we look at what's happened before, we look at what's happening currently, we're looking at what could happen, and then we formulate the right strategy and game plan so that we can execute and allows us to hit our goals. So today's gonna be no different. We need to get the right context. So let's get the right context. So I believe personally that the coronavirus was just a needle, and that needle came and popped the bubble in our economy. And so you say, well, Adam, what bubbles were there? Well, one, there's a real estate bubble. And if you've been paying attention to real estate at all the last couple of years, you know we've been saying that there should be a bubble, there should be a pop, that there should be a correction, there should be some type of recession in the economy. They typically, before, were saying every about 7 or 8 years, the real estate market kind of just goes up and down, right? Well, we got to 7, nothing happened. 8, nothing happened. Stocks went down, had a correction, 2017, 18. Real estate was still blowing and going. 2019, nothing happened. And so prices were just getting higher and higher and higher and higher. And so we knew there was correction. We were preparing. Those of us who have been in real estate for quite a while, we were also preparing for a recession. And so real estate was already geared and ready to pop, and coronavirus was just the right needle to help make that happen. Then you have stocks. You have so many inflated, overvalued companies that aren't even making profits, aren't even cash flowing properly, that have such high valuation just because they can raise funds because of a great idea, which is fine, which is good. Some of you guys have profited from those things, but they're still overvalued when you look at the market, when you look at the last 10, 15, 50 years of this United States economy. So you have the stock market that was way overvalued. So that was ready to pop, and that goes up and down every 2 to 4 years. Every time someone gets voted, every time there's election, every time oil goes down, every time. The stock market is like an emotional roller coaster, right? So anyway, then you have the fact that we have the highest amount of debt from a consumer level and a corporate level. Okay, statistics came out that that 76% of Americans did not even have $1,000 in a savings account to help them in case of an emergency fund or anything of that nature. 76%. Okay, the consumer debt that people have, credit cards and things and retail credit cards, things like that, is so high. Okay, corporate debt. So check this out. We had some of the most prosperous 10-year run in the history of our country. Yet, corporations have never been in more debt, and consumers and families have never been in more debt. So what does that mean? That means that if somehow cash flow were to stop, if somehow revenue was to slow down, if somehow our income was affected and the debt was still there, we might be in trouble. We might be in trouble, right? Hence, coronavirus. So what I like to, so how does that affect real estate, okay? So some of you who pay attention to stocks, you know that in stocks, like I said, it's an emotional roller coaster. One day you're up, one day you're down. 3 days you're up, 2 days you're down. It's pretty much based on the fear or the how optimistic investors are in the market dictates whether stocks are up or stocks are down, right? And everything's moving quickly, meaning you could buy a stock today, it could start losing you money in 3 days, and you could just sell it that same day and preserve your losses and just get out, right? And you could let's say you could not have any stock today. You see a stock price on something go down tomorrow, you buy it, and then 3 days later it goes back up again, and you made a little bit of money. So stocks are great like that, but they're really, really volatile, where they go up and down, right? In the blink of an eye. Real estate is not like that. Real estate, because it is a bigger investment, because in real estate you have debt, where traditionally in stocks you're doing it with cash, right? You're doing it with your own money. But with stocks, with real estate, typically you could be using cash, but it's still a big asset that some people have emotional ties to as well. Number one. Number two, a lot of real estate is done through debt, through financing, so that kind of slows the process down as well. And then three, you're dealing with a huge asset, right? We're not talking about $1,000, $5,000, $10,000. We're talking about hundreds of thousands and millions of dollars when doing a real estate transaction. So because of that, and you also have more parties involved, right? You have a buyer, you have a seller, you have an appraiser, you have a lender, you have an inspector, you have, you have contractors, you have the county, you have the state. You have so many more parties involved in the real estate transaction as well, that when something happens to the real estate industry, it's not up today, down tomorrow, down yesterday, up today. It's not like that. It's more of a slower, gradual decline, more of a slower, gradual incline, and then depending on your local real estate market, prices, for your advantage, can either start shooting up quicker or start declining quicker. But that's also the good thing about real estate. Real estate is just more of a stable investment that you can kind of start planning for, strategize for, foresee things, and kind of hedge your bets on certain things, right? So how does this affect whether I should sell or buy? How does this affect whether I should sell my real estate assets or whether I should keep them, right? So here's what we're saying, okay? Just like, and the best thing I can relate this to is like stocks, okay? Just like you have a stock and you bought it low or you bought it at a good price, okay? And it's not a stock like a blue chip stock that you'd say, you know, I'd have this for the rest of my life. It's more of like, let me see what happens, right? Or it's more of like, okay, this company could be around until they get bought out. So let me just, you know, buy into them until the stock number goes up, right? So what I call speculative stock. So once the stock price gets high enough to where you're pretty sure this company's being overvalued, meaning I don't think this stock is going to go up much higher. I think from now it's just going to go downhill, right? I think this is the height of where the company or where the stock can go. I think it's pretty much down here from here. So typically what you would do in that situation is you would then look to sell your stock, get your money out, and then either put it into another asset, another stock that is more stable, a blue chip type stock that's more stable over time, or buy more shares of a similar stock where you could buy it low and then kind of ride the wave higher if you think the stock price is going to go up. So with real estate, we've been telling our clients, our personal clients for the last year and a half, that if they have the desire to sell their home in less than 3 to 5 years, okay, and they have equity in their home, which they all did, right? Because obviously we buy strategically, we buy on purpose, we buy with strategy and game plan. So because of the appreciation that's happened here in our state, in our local city, and because we help our clients buy, right? Our clients had equity in all the assets that they had real estate related, right? So what we told them the last year and a half is, look, prices have pretty plateaued, right? Like prices are pretty much as high as they're going to be. And this is what I meant earlier about how we knew a recession would come. We knew a correction would come. And so what we said was, how we were advising them was, hey, you might want to start thinking about selling your assets now. You might want to start thinking about getting your equity out of your property now. If you were going to sell, meaning if you said to yourself, you know, Adam, I don't want to sell right now, but I may want to sell in 2 years. No, sell now. You know, Adam, I like the property. I'm getting a cash flow. I like the tenant. You know, I don't really want to sell right now. I think I want to sell in about 3 years. Sell right now. You know, Adam, I don't think I want to sell the property. I think I want to hold on to it for at least another 7 years, 10 years. I just got it. I love it. It's great. We're not looking to retire anytime soon. Yeah, 7 to 10 years might be the next even time zone, next time period that I even think about selling it. Cool. Keep the property. So understand what we're saying. What we're saying is the last year and a half, we're telling people, if you are considering that you might even think about selling your property within the next 2 to 5 years, essentially less than 5 years, sell it now, because your property is not going to go up in value really past this point significantly where it offsets your risk. It's better now because a recession is coming, because a correction is coming. It's better now that we're seeing prices plateau. It's better now that you get your equity out of the property and then either use it or get it out and reinvest it when the time is right? Or you do monopoly, you sell your greenhouse and you go buy a hotel, right? Or buy a duplex, or buy a threeplex, or buy a fourplex. And so a lot of our clients did that. A lot of our clients that bought properties in 2012, 13, 14, 15, 16, even 18, we started selling their properties because they'd gotten so much equity through buy downs of the principal, through appreciation, that now it was time to pull that equity out. And those who were thinking about selling their property in less than 5 years, we got them out. Why? Because think about the alternative. Let's say some of those people, and this might be you. Let's say you have a property, you bought it for $130,000, right? And then let's say now it's worth $200,000, right? By the time you bought it, it had an ARV, after repair value, of $160,000. Now it's worth $200,000. You got some good equity in that property. But understand what equity is. Equity just means profit if you were to sell it, or profit if you were to refinance, profit if you were to cash out, so to speak. But if you ain't cashing out, if you still own the property and you ain't selling it, you ain't cashing out, and you just say, look at all this equity I got, Okay, that's cool, but unless you're using the equity, unless you plan to put the equity to good use, it really doesn't do anything for you, right? So let's say today it's worth $200,000, but let's say in 6 months after coronavirus, in a year after more bankruptcies and unemployment goes higher and all these other kind of things, let's say your property goes from $200,000 down to $140,000 after so many foreclosures happened because so many people thought they were going into mortgage forbearance, and some people thought their payments were forgiven, some people thought their payments were going to the back of the loan, and some banks are going to say, it's time to pay up, right? What are you going to do when your property went down in value from 200 down to 150, and you just lost $50,000 worth of equity? And guess what? That $50,000 worth of equity does not come back to you tomorrow. It does not come back to you tomorrow. So now what? So now you have to make the decision of, do you sell the property now at this point and only come away with a few dollars, right? And knowing that you lost $50,000 worth of equity, or you then gotta wait X number of years, because it ain't 6 months, it ain't 9 months. You gotta wait X number of years to try to even come close to getting back up to $200,000 so you can recoup some of your money back. But understand, you wasted so much time because you could have had the extra 50 now, but now you're gonna wait another 3, 4, 5, 6, 7 years to just get the 50. So really, when you look at time value of money, you still lost money, because if you would have taken out the 50 now, what could that 50 have done for you over the next 3, 5, 7 years? Do you see what I'm saying? So we advise a lot of our clients to sell their properties that they had equity in, and they knew there was a possibility that they would want to sell it in 5 years or less. Like knowing they didn't want to keep it long term, right? All of our clients that wanted to keep their properties long term, all of our clients that were like, no, I'm not selling my properties for another 15 years, 10 years, right? Because I have a retirement goal, because I'm building a portfolio, whatever the case may be. They don't even care about equity yet, right? So no, keep those properties. You're good. Things will bounce back. Rental rates will be higher, in the future than they are right now. You're good. So those are, if you find yourself in that kind of situation where you say, man, I knew it. You told me, Adam, I was distracted. I was busy with other stuff. I didn't do it. That's what I recommend. Don't wait a year. Don't wait 2 years. Don't wait 3 years when the value of your property is going to be less. If you know that you don't want to hold on to that property for more than at this point, I'd say more than 3, 4 years, it's best to sell it now so you can maximize the amount of equity that you can get out of the property, and then you can take that equity and put it towards something else. You can do a 1031 exchange, you can take the cash out and then put it towards a great deal, because trust me, there will be a lot of good deals, probably about 6, 9 months over the next 2 years after that point. We're going that direction, and we'll do another video about that as well. So that's how you know if it's the right time for you to sell. Same thing applies for those people that are wondering if it's the right time for them to refinance. So let's say you have a property, you're going to hold on to it for longer than 3, 4, 5 years. Refinance your property now. Why? Because interest rates are very low right now, number one. And then number two, again, when you refinance, especially if you're doing a cash out refinance, this is the most your property is going to probably be worth over the next 3 to 5 years. So in terms of doing a cash out refinance, get the most money now, get a better interest rate on the property now, and then ride this thing out, and you'll be in such a better position, and you'll get some cash possibly currently as well, right? To either put towards another deal or to just build up the emergency fund for you and your family just in case something were to happen, right? So another group of people that should be thinking to sell is if you know your property is overvalued, okay? You know it's overvalued. It's not just that you have equity, it's just overvalued. You're like, man, $300,000 for this, $500,000 for this, $250,000 for this, when I know it's probably really worth this in a normal market. Sell it now. Sell it now. If you have overvalued asset, overvalued real estate, get your money out now while you can. Let's see. And for those of you who are thinking about timing, well, Adam, I'm not sure I'm ready to sell yet, or Adam, I want to see what happens. That's cool. That's great. Adam, I love the tenants in the property. That's cool. That's great. Calm down. That's what we're here for. If you have any questions, feel free, reach out to us. We love to help. It doesn't matter if you're in Texas, San Antonio, where you're at in the nation, reach out to us. We love to help consult. We love to help you guys strategize as far as the best moves for you to make for you and your family. But If you say, you know what, after listening to Adam, you're right, I should sell, then here's what I recommend to you, okay? Here's what I recommend to you. Do it before the election. Do it before the election. Guys, if you ever heard anything I've said, pay attention now. If you think that you want to sell within the next 3 to 5 years, don't wait, sell it now, okay? Second point, if you're going to sell, do it before the election, okay? Anytime we have an election, okay, the economy has a little shakeup, okay? We've already had a shakeup just now, right? And we're still shaking from it, okay? So don't take another hit to your assets, to your investments by selling your property after the next shakeup. The election is this year. So what I recommend, we're pretty much approaching summertime. It's pretty much the month of May, right? So do what you need to do, talk to a local professional, hit us up, talk to what needs to happen to help you maximize and get the most money for your asset. Talk to local professionals to understand what's happening in your local market, all the pros, all the cons, so you know how to strategize and make sure you get the most amount of money for your property and sell it in the quickest amount of time, and get it done. Get it done before the election. That way you maximize your asset, you maximize your return on investment and the money that you can pull out and either, again, put in your war chest or to put in another investment and get a good discounted deal, right? So I hope this helps, guys. Those are our points. This is not the time to gamble with your real estate assets. You have to make a decision. You either need to know that, hey, I'm good, I'm getting cash flow assets, we're riding this thing out for the next 17 years plus, or, man, you know what? I was thinking about selling in a couple of years, less than 5 years. Let's do it now, do it now, do it now, and definitely do it before the election. So if you guys have any other questions, let us know. Subscribe below so you can see our next video. Hit like if you think this information was awesome, and let's keep this going.